video on investment accounts. So I hope by now you're clear about the concept and idea behind investment accounts and how it is prepared and the format of investment accounts. In today's video, we will see certain portions or certain topics in detail, and also we'll work out certain problems to make you understand what is actually discussed in a particular topic. Okay, so coming to investment accounts, when investment accounts are prepared or taken into account, it can be considered in two cases. One is preparation of the investment account on the purchases or sale of investment on the date of payment of interest, and purchase and sale of investment before the date of payment of interest. So investment accounts can be prepared in these two cases, on the date of payment of interest and before the date of payment of interest. So first we will see how investment accounts are prepared on the date of payment of interest. And then we'll move to the next case, which is a bit lengthy and elaborate to understand, but we'll understand it with certain examples. Okay. So purchase or sale of investment on the date of payment of interest. So this is a question. On 1st January 2016, Chand Limited purchased 1,000 12% debentures of Tata Chemicals Limited of rupees 100 each at 95. On 1st July 2016, 600 debentures were sold at 98. Debenture interest is payable half yearly on 30th June and 31st December. So when we get a question to prepare the investment account, first we need to check whether the interest is paid on the day or whether the purchase or sale is done on the date of payment of interest. So here the date of payment of interest is half yearly, that is 30th June and 31st December. So when is the purchase happening? Purchase is happening on 1st January. And when is the sale happening? Sale is happening on 1st July. So 30th June is the payment of interest and 1st July sale is happening. So we can conclude that this is the first case where purchase or sale of investment is happening on the date of payment of interest. So these will be the information given in this particular question. So now we'll move to preparation of investment accounts. Okay. So first we will have the format of investment accounts. In the books of Chand Limited, 12% Tata Chemicals debenture account. We'll have the particulars column, date column. Date column is very important in this case. Date column, particulars column. Then nominal value, interest column, principal, and same in the credit side. So we'll go one by one from the question and we'll try to record all the transactions. Okay. So on 1st January 2016, so the first transaction is happening or first statement is happening on 1st January 2016. Chand Limited purchased 1,000 12% debentures of Tata Chemicals. So first we have a purchase here. We need to record the purchase. So purchase is recorded on 1st January 2016 to bank. Then next question is as to what is the nominal value and what is the principal value. So nominal value is the actual value. That means 1,000 debentures are there. Actual value of a debenture is 100. So 1,000 into 100 will be the nominal value. That is 1 lakh. Then what will be the principal value? Principal value is equal to the number of debentures, that is 1,000, the number of debentures into the price, the purchase price of the debenture, that is 1,000 into 95, that comes to 95,000. Okay. Then, so that is the first transaction. Then we'll go for the next transaction. 12%, on 1st July 2016, 600 debentures were sold at rupees 98 each. We have a sales. So that sales has taken place on 1st July 2016. But from the question, we know that we have to show interest on a half yearly basis on 30th June and 31st December. So first we'll go by chronological order. We'll show the interest for 30th June. So we have interest 36/2016 by bank. What will be the interest? Interest will be, see the first working out. Interest for 6 months at 12% will be 1 lakh, that is nominal value. We calculate interest always on the nominal value. 1 lakh into 12% into 6 by 12 since it is half yearly. So we have 6,000 as interest. Okay. Then we'll record the sales on 1st July 2016. So we'll credit it 1st July 2016 by bank. 600 debentures were sold at 98 each. Okay. So tell me how we will calculate the nominal value. What will be the nominal value? 600 into 100, that is 60,000. What will be the principal value? 600 into 98, that will be 58,800. Okay, so sales is over. Next we have another interest payable on 31st December 2016. So that is recorded here by bank. But now we have to take care of one thing, that is we had an amount of 1 lakh rupees debenture, but from that we made a sale of 60,000 rupees debenture. So what is remaining in our hand? That is 40,000. Okay, 40,000 debentures are only remaining in our hand. So when we calculate the interest, we have to take care of that. So we have 40,000 into 12% into 6 by 12. We will get 2,400 as the interest. Okay, so we had 1 lakh rupees debentures. We sold 60,000 rupees debentures. Remaining is 40,000. So we only need to calculate interest upon the remaining amount of debentures. So we got 2,400. Now we'll balance this. So first we'll balance the interest column. 6,000 plus 2,400, we got 8,400. That will be written to P&L account. Okay, P&L account. Then we'll balance the nominal value column. We have 1 lakh here, 1 lakh 60,000, and the balance is 40,000. Simple. So when we made the sale, when the sale happened, what was the profit? There is a chance of acquiring profit or loss on the sale. What will be the profit or loss on sale is the next question. Okay. So in every cases we have to check whether there is a profit or loss in sale. So 600 debentures were sold. Actually the 600 debentures were bought at a price of 95 and 600 debentures were sold at a price of 98. So from this we can conclude that there is a profit, 3 rupees profit. So 3 rupees profit on 600 debentures. That comes to 1,800. Okay. So that means 95 is the purchase price, 98 is the sale price. So what is the difference? Rupees 3. So 600 upon 600 debentures, we got a profit of 3 rupees each. So it comes to 600 into 3, which is known as 1,800. And that should be also written to the P&L account. Now we'll balance our principal value column. 96,800, debit side is more, 96,800, and we'll get the balance as 38,000. So at the time of valuing the closing balance of debentures, it can be valued either at cost price or market price, whichever is less. So in this question, the market price is given as 97. We have the cost price as 95. So which amount is less, 95 or 97? 95 is less. So we value or we close this investment account at the lowest price, that is 95. So we have 400 debentures. The number of debentures, closing number of debentures is 400. 400 into 95, we have 38,000. So 38,000 comes as the closing balance of this particular account. Okay. So you just compare the market price as well as the cost price of the closing number of debentures and take whichever is less. Okay. So this is a simple problem without much adjustments. So this problem explains us about the adjustments that are taken at the time of purchase or sale of investment on the date of payment of interest. So I hope you understood this particular concept and its example. So work out more questions from your book and try to understand it. Okay. So in the next video, we will discuss on the purchase or sale of investment before the date of payment of interest and certain adjustments related to that. Okay. Thank you.